Hey guys, SGT here, and guess what? I could not be more thrilled to have back on the line one of the smartest and most consistent voices in the world, James Turk, founder of Gold Money. Mr. Turk, welcome back.
Thanks, Sean. It's always a pleasure to speak with you.
Well, we really appreciate your time. I know that you're in Spain, and kudos to you for making that decision, sir, because life in America seems to be melting down at a pretty rapid pace, but that's true all over Europe as well. There's so much to discuss since we last spoke. It looks like Italy's going to bring down the EU. Gary Gensler is saying that MF Global is an isolated incident. There's a massive silver and gold raid on Thursday. Sir, with so much going on, where would you like to begin?
Well, when it comes to markets, prices can go anywhere, particularly if they're being influenced by, government forces. Government intervention has kept interest rates very low, even though clearly the interest rates should be much higher than what they are at present. But when it comes to gold and silver, it's a little bit different because you get silver out of thin air, like you can create, paper dollars out of thin air. So, the government is sort of limited, or the manipulators or interveners in the precious metals markets are limited in the sense that when you get it down to a price that just represents exceptionally good value, money comes out of the sidelines and people buy it. And I think that's really the environment that we're in right here. With gold testing $1,700 and silver, back in the low 30s testing support there. I think you're starting to see a lot of money coming back into the market. We've got option expiry next week, and that's usually an indication that prices will stay soft. But once option expiry is over, if not even before, then I expect silver and gold to both be moving higher.
Now, let me ask you this. On Wednesday, it was reported that J.P. Morgan tripled registered silver inventories from the day before with an adjustment of 1.1 million ounces of eligible silver into registered. And on Thursday, another massive movement of silver was reported in the COMEX inventory update with 1.2 million ounces of silver being deposited into Brink's eligible vaults. Sir, is J.P. Morgan cornered? Is that what's happening here?
I really don't know. I've seen those reports that there has been the movement of physical from eligible into the registered category. And typically when that happens, it's usually an indication that somebody's preparing for delivery and to take delivery under futures contracts. But, there's so many cross currents going on with the MF Global collapse. It's really hard to say whether that's going to happen this time or whether there's something else at work here. It's just really hard to get any, insight because of the problems surrounding MF Global.
Well, let's talk a little bit about that. You've probably already read this, but if I could, just for the audience, let me read just a couple of blurbs from Ann Barnhart's letter that she sent to her colleagues and her clients. This was posted on Zero Hedge and, of course, on Barnhart Capital Management's website. Now, it's just a small firm, but it needs to be read. Let me just briefly take you through this. She writes, and I quote, "I could no longer tell my clients that their monies and positions were safe in the futures and options markets because they are not. The futures and options markets are no longer viable. It's my recommendation that all customers withdraw from all of the markets as soon as possible so that they have the best chance of protecting themselves and their equity." She goes on to call out the Obama administration specifically. And have you read this, sir? And what's your take on it?
Yeah, I have read the letter, and I'm sure there are many, many people who were caught in the MF Global collapse that feel exactly like her. I've done a little bit more reading and investigation into some of the possible issues, and there's an interesting article that came out in the Wall Street Journal talking about what may have happened, and then Bloomberg also had an interesting article. They're talking about a rule change that allowed it's Regulation 1.5 under the CFTC, the Commodity Futures Trading Commission. It basically allowed futures commission merchants to do a type of swap with customer money. Rather than keeping customer money in completely safe obligations, they were able to do some swaps on a short-term basis for sovereign government bonds. So what the Wall Street Journal article and the Bloomberg article were implying that some customer money was used to swap as a swap to support sovereign government debt that was being purchased by MF Global. So I don't know. There's still more facts to come out. I only know what I've been reading in the various news reports, but it is quite a shock in the sense that, having traded myself in the futures industry, futures market for over 30 years, one of the basic principles has always been this complete segregation of customer money. And, that's one of the primary responsibilities of regulators. But this rule change that Bloomberg was talking about indicates that, maybe customer money in some firms isn't as segregated as we are led to believe.
Yeah, exactly. And a couple of things pop into my head as we discuss MF Global. Gary Gensler is saying, calm down, this is just an isolated incident. Meanwhile, you have Bart Chilton also saying the day before that he thinks that there may be rampant criminality here and that it's a much bigger deal. You've got Ann Barnhart saying, look, if the smartest investors, can't trust these markets, it's time to get out entirely. And to your point, when they are commingling funds, it is the ultimate no-no. It's the ultimate breach of rule of law. So my point is, sir, if the smartest people in the markets with the most money to trade have no more confidence, is this market on the verge of a complete meltdown?
Well, that's really an impossible question to answer. Clearly this has shaken confidence in the integrity of the futures market. But, as I sit here at my desk and look at the computer, I see the futures market continuing to trade. So, I think what people are trying to do is trying to assess exactly what happened here and continue, with their lives. Thousands and thousands of people have their livelihood dependent on what's going on in the futures industry. The other thing that's sort of shocking here is, when REFCO went under a few years ago, and, there was criminal fraud involved in that one, the customer funds, were intact. After a short little blip, life went on as usual. I just find it extremely difficult to understand and believe that it's taken so long for them to locate the $600 million of customer funds that are missing. I find that just really quite unbelievable. But this Wall Street Journal and Bloomberg articles, they weren't suggesting that they were commingling funds. To me, the way I read it, it suggested that they were borrowing customer funds. But maybe in MF Global's own minds, they were viewing it as something different. But I don't know. The bottom line is that there's still a lot, I think, that has to be discovered and reported to the papers and the news media so we can understand exactly what went on in the middle of MF Global. And hopefully those revelations will be forthcoming very, very quickly. And we can put this behind us as quickly as possible. Hopefully, Gensler's right, saying that it's an isolated incident. But until we know exactly what happened in MF Global, we really won't know whether it is isolated or not.
Do you find it suspicious at all, and I'm sure that you do because I certainly do, that John Corzine, one of the former partners over at Goldman Sachs, former governor of New Jersey, ran this company into the ground in just a couple of years. It's a company that had been around for decades and decades. Do you find it suspicious that hundreds of millions of dollars of that customer money ended up in J.P. Morgan accounts?
J.P. Morgan is one of the biggest banks in the United States, so to me, there's nothing unusual from that. I would have been surprised if MF Global didn't have an account at J.P. Morgan.
Okay. Well, maybe we should bridge over to what's happening in Europe. Eddie Hobbs gave commentary recently. I guess he's a financial expert. I wasn't familiar with him prior to his statement on a morning news program in Europe in which he said Italy is on its last legs and there is no plan B. Plan B is to start getting your money out of the euro and out of that jurisdiction and into gold. What is your take, being that you're in Spain, which is commonly referred to as one of the pigs, Portugal, Ireland, Greece, and Spain? What is your take on what we're seeing happen with Italy? Is there any way to save the Eurozone? I guess they're asking the Germans to do it, and the German people aren't too keen on that idea.
I don't think there's enough money to save the Eurozone, at least the way they're trying to go about it. They made a mistake way back at the very beginning. What they decided to do is bail out any country that got into trouble or that was over-leveraged. And they did that in order to try to keep the banking system afloat. But, the banks in Europe, indeed, most banks worldwide actually, are insolvent. Here in Europe, it's been reported that the loan-to-deposit ratio is 1.2. In other words, there are 20% more loans than there are deposits. Now, when I learned banking back in the 1960s, the prudent loan-to-deposit ratio is 0.75. So you always had less loans than you had deposits. So in case some deposits left for whatever reasons, you still were able to fund your loan portfolio. So what's happening now is the European banks are trying to sell off assets or raise funding. The funding markets are pretty well closed, so they're trying to sell assets, but there's no one to sell assets to, simply because a lot of these assets are inferior quality. And secondly, nobody really wants to get stuck with illiquid assets at this moment in time. So borrowing costs have been rising as a consequence. Borrowing from the ECB, the European Central Bank, has been rising. The European Central Bank now owns 180 billion euros worth of government bonds. And even though it's been buying bonds left and right, interest rates on government paper here in Europe continues to rise. Italy went over 7% just a few days ago, and 7% has been considered the threshold that once you go over it, then you're basically going to be needing a bailout, because that 7% threshold was the level that Greece, Ireland, and Portugal hit when they started needing a bailout. So Italy's already over that. And Spain is just a fraction below. It's 6.95 on the latest issue that it just did. Looks like it's going to be over 7% here in the not-too-distant future. What these governments are failing to recognize, and the politicians are failing to recognize, is that the system that worked in the past no longer works. It's broken. You just can't put more debt on more debt on more debt. We had the boom, we had the good times, and now those debts have to be either repaid or written off. A lot of the debts are bad, so invariably some of them have to be written off. And as a consequence, banks have to take the hit, but the banks are insolvent because they're so highly leveraged if they write off these debts. Consequently, they're going to lose their capital base. So, what they're trying to do is to keep this thing going, but it's reached a stage where it can no longer be kept going. Reality is finally hitting home. And the only way to play it, in my mind, Sean, is to own physical gold, own physical silver, because those are the safe haven. They don't have counterparty risk. In other words, they're not dependent on anyone's promise, any bank's balance sheet, or anything of that nature. The value of those assets comes from the market's understanding, that gold has been money for 5,000 years, and it's still going to be money for the foreseeable future. So, I don't know how it's going to unravel, but it looks like it's getting worse and worse, and I think we're heading for a big train wreck. In fact, the train wreck's probably already started. It's just a very slow motion train wreck, and we don't recognize it as a train wreck. But that seems to be what's happening.
Hey guys, thanks so much for watching part 1. Don't miss part 2. Click here.